Here we are discussing case scenario 9. Are you all ready? Come on, let's start with case scenario 9. This case scenario 9 is on buyback of securities. Focus. Acer Limited, a company engaged in various business activities, has decided to initiate a share buyback on 1st of April 2023. The company plans to repurchase 25,000 equity shares of rupees 10 each at a price of 20. Before I forget, I'll make a note of this. You guys pay attention. So in case scenario number 9, number of equity shares that is supposed to be bought back is 25,000. Nominal value of the equity shares is 10. Buyback price of the share is 20. Basic information taken care of. This buyback initiative is in compliance with company's articles of association. Even if they would have not mentioned, we would have assumed that they have taken necessary steps. Remember the steps? We have covered it in theory. If not, you can watch the quick revision video in which we have covered it. So it says that the share should be fully paid up. The company should have power in its articles of association. They should have passed board resolution if the buyback is up to 10%. If it is more than 10 up to 25, then they are supposed to pass a special resolution in the general meeting. They should have had no dues with regard to redemption of debentures or any deposits payment and quite a lot of other things. Just given the gist of it, please do watch the quick revision video to get understanding what are the provisions of Companies Act regarding this. This buyback initiative is in compliance with the company's articles of association and necessary resolution has been duly passed as part of the financial arrangement for the share buyback. Acer Limited initiates to utilize current assets, particularly bank balance. So whenever you're doing buyback, as per section 68, three sources of funds can be utilized. What are they? SPF, S, security premium, P, proceeds of fresh issue, F, free reserves. They are not using proceeds of fresh issue in this case. They are using other two. Internal funds has been utilized. So we might have to create CRR, but that's not questioned in this. Basically, we're using internal funds. They're not going for any fresh issue of securities. Got this? Read this further. To make the payment for repurchase shares. Here is the snapshot. Wow. They've taken screenshot of the balance sheet and then they've provided it to us. Yeah, screenshot. You know, the brake and clutch on this the screenshot. That only. Share capital. Equity share capital is 12,50,000 rupees, which is shares of 10 each. So basically, they have 12,50,000 divided by 10. 1,25,000 shares. Come to the last part, not this, in our discussion that we did. There are three tests that are supposed to be done to determine maximum number of shares that can. Number 1, debt equity ratio test. Number 2, resource test. Number 3, share outstanding test. DRS, decision review system. But we will start with yes, share outstanding test. Then we'll do resource test. Finally, we'll do debt equity ratio. So can we do it other way around? Hey, yeah, your choice. Get this? Let's do share outstanding test. There is 12,50,000 worth of share capital. How much is share capital? 12,50,000. Divide it by 10. You will get 1,25,000 shares outstanding. In 1,25,000 shares outstanding, maximum buyback allowed is only 25% to 25% of 1,25,000 which is allowed. What do you get? 31,250 shares is the maximum number of shares that you can buy back as per share outstanding test. Next test is resource test. For resource test, you need to apply 25%, but not of number of shares outstanding. You should apply 25% of equity. What is equity? PUC plus FR plus SP. PUC, paid up capital. FR, free reserves. SP, security premium. Shall we add them first? Very good. See, they've given this. I'll write here computation of equity, paid up share capital, equity share capital is 12,50,000. I've written this. Next, I have here reserves and surplus, security premium. Is security premium part of my equity? Yes. But I will first take free reserves. Free reserves, what and all do we have? P&L and revenue reserve. P&L 12 lakh, 1,25,000. Revenue reserve 15 lakh. I would write here reserves. P&L, revenue reserves. P&L 1,25,000. Revenue reserve 15 lakh. Together 16 lakh. I've taken all the reserves together. After this, I will take my security premium of 2 lakh. This is also part of my equity. Security premium 2 lakh. But take your calculator, total this for me. 12,50,000 plus 16,25,000 plus 2,50,000. 31,25,000 is equity. For resource test, Maximum funds that can be applied is 25% of 31 lakh 25,000. Resource test. Observe here, equity 31 lakh 25. Maximum funds that can be utilized is 25%. Apply 25% of 31 lakh 25. Sorry, 31 lakh. What do we get? 7 lakh 81,250. This much money we can pay. Not this much value of shares we can buy back. How much are we paying per share? We wrote it in the beginning. Yeah, each share nominal value is 10, but what we're paying is 20. Should I divide this 7 lakh 81,250 by 10 or 20? 20. We'll divide it by buyback price of 20. You will get number of shares that can be bought back maximum using what test? Resource test. As per, do it. 7 lakh 81,250 divided by 20. You will get 39,062.5. Should I round it off to 39,063? No. 39,062 should be rounded backward. If you do 39,063 shares buyback, that will be more than 25% buyback. It's okay if it becomes slightly less. It should not become slightly. Yeah, ಲೆಕ್ಕ ಕಡಿಮೆ ಆದ್ರೂ ಪರವಾಗಿಲ್ಲ, ಜಾಸ್ತಿ ಆಗದೆ ಇರೋ ತರ ನೋಡ್ಕೊಬೇಕು. As per Companies Act. This is not movie, okay? They send 100 people, I will kill all of them. It's okay if you can send more people. Yeah, it has to be rounded down. Oops, to 39,062 shares. Answer will be 39,062, not 39,063. Sometimes if they put one nice biscuit by giving 39,062 and 63, don't select 60. They don't have to eat biscuit till next term of exam. Yeah, ಅದೇ ಬಿಸ್ಕೆಟ್ ಹಂಗೆ ಅವ್ರಿಗೆ ತಿನ್ಸ್ಬಿಡಿ. Okay, long term borrowing 14% debentures 28 lakh 75, unsecured loan 16 lakh 50. Hey, both are part of our loan. If there is share application money rejected, refund pending, that is also part of our loan. Smallest of the details will be taken into loan. So 2875 and 16 lakh 50. Let me write here debt. This is the most interesting part. We made pretty simple. If you remember, I would write here 14% debentures 28 lakh 75, unsecured loan 16 lakh 50. Add them together, 45 lakh 25. This is the debt part. This is the most interesting part. Highlight of the movie. Whenever you need to do debt equity ratio, in the study material, they have made it very complicated. They have told assume number of shares or nominal value of shares to be bought back to be X, CRR to be created to be Y. Whenever you buy back equity shares, share capital will decrease by X, reserve will decrease by Y. Write one simultaneous linear equation, actually two, solve for two, substitute one in the other, and then not required. Very simple thing. We have covered it just before this. You remember how to identify maximum permissible shares to be bought back? Very simple. You take equity minus 50% of debt. Equity should be minimum 50% of debt, no? So equity minus 50% of debt. In this case, equity 31 lakh 25, debt 45 lakh 25. Equity minus 50% of debt, that is numerator, divided by buyback price plus nominal value. Because buyback price, two things: one nominal value, one security premium. Nominal value will decrease share capital nominal value. Premium on buyback will decrease security premium plus nominal value, because this will decrease CRR will be taken from free reserves. So numerator will be equity minus 50% of debt divided by buyback price plus nominal value. Is that right? Equity 31 lakh 25, debt 45 lakh 25. Right, this year equity before buyback 31 lakh 25. Minimum equity to be maintained is 50% of debt. How much is that? That is 45 lakh 25,000 into 50%, which comes to 22 lakh 62,500. If you deduct, what do we get? That is the debt that can be bought back. That is the debt that can be bought back. How much do we get? 8 lakh 62,500. This is the maximum decrease that is we are okay with. For each share bought back, how much will there be decrease? It will be decreased by buyback price plus nominal value. Nominal value of shares bought back will decrease equity share capital. Premium on buyback will reduce security premium. Again, nominal value will reduce reserves for CRR. So this is our numerator, 862,500, equity minus 50% of debt. Denominator, what do we take? Buyback price plus nominal value. How much is buyback price? 20. And then nominal value 10. Divide this by 30. You will get 28,750 as the shares. We have done it all that's needed. By the time we came to the end, 8 marker question, complete explanation, we've done it in less than 10 minutes. Now all that we need to do is answer the questions. See, by using share outstanding test, number of shares that can be bought back. Share outstanding test, number of shares that can be bought back. 31,250. Answer is 31,250, which is option B. Got it? Second one. By using resource test, determine the number of shares that can be bought back. Resource test, we can buy back 39,062.5, which will bring it down to 39,062. 39,062. 39,062. Understood? This is second question. See the third one. Using debt to equity ratio. 1 second. Debt to equity ratio. 28,750. Full ready. What have they asked? Number of shares that can be bought back. 28,750. Panta. They've asked one more question. On the basis of all the 3 tests. Oh my god, very difficult. Hey, take whichever is less. Yeah, whichever is less. You need to comply with one of the tests or all the tests. All the tests. Very nice. So 28,750 or 39,062 or 31,250. Whichever is less is 28,750 is the answer for option C. Option C is the answer for question number 4. Yay.